Hello beautiful people, welcome to today's video where we talk about credit scores and credit cards. Whether you are a young professional or you have been in the job market for a while, knowing and understanding your credit score and how credit cards works is quite a must. So it's a must for everybody, whether you are starting out or you have been working and earning for a while, to have a good understanding of your credit score and the use of credit cards. In this video, we are going to look at how your credit score is determined, how to build a good credit score, how to choose a credit card, as well as some common mistakes or some common pitfalls that you need to avoid when it comes to credit cards and credit score. If you are new here, my name is Elizabeth, but you can also call me Les. And on this channel, I talk about personal finances as well as wholesome living. So if this is the kind of content that you have interest in, you are definitely at the right place and I am happy to have you here. Please note that nothing I say on this channel should be seen or received as financial advice. And if you are looking for financial advice, please do speak to somebody who is certified and registered with the relevant bodies in your area in order to give financial advice. So let's dive into the video. So what is your credit score, or what is a credit score? Your credit score is like your financial GPA. It's like that number that is allocated to you by the credit bureaus that represents how you have done in your credit history or what is your credit standing. This number actually tells lenders who can possibly lend you money whether you are a reliable borrower or not a reliable borrower. It tells potential lenders of how risky or how reliable you are as a borrower. And they use that information to basically decide whether to lend you money or not to lend you money, or to give you credit or not to give you credit. So the number that you are assigned as your credit score is actually determined by a number of factors that the credit bureaus look at in order to determine what your credit score is. And we are going to break that down shortly. There are 5 factors that determines your credit score, and we are going to look at each of them now. The first factor is your credit history, and this makes up a large portion of the factors that actually contribute to your credit score. And here they look at how you have done with credit in the past. Have you been paying on time? Have you not been paying on time? Here, lenders are looking at whether you make your payments on time or whether you do not make your payments on time, and whether you default or you do not default. Payment history contributes 35% towards your credit score. The second factor is credit utilization, which also contributes a large portion to your credit score, which is 30%. And here they are looking at what percentage of your available credit, or what portion of your available credit are you utilizing. Are you utilizing your entire credit amount or your entire credit limit, or are you using only half of it, or are you using less than half of it, for example? So they really look at your utilization, how much of your credit which has been availed to you are you using. The third factor is the length of your credit history, and this contributes 15% towards your credit score. Under this one, they are looking at how long have you had your accounts active, or how long have you had your accounts open. So they are looking at the lifetime of your credit accounts. Have you been having this account active, for instance, for 3 years, or for 6 years, or for 10 years? And the older your accounts, the better in terms of how you will get scored. The fourth factor is credit mix, and credit mix contributes 10% towards your credit score. And under this one, they are looking at whether you have different types of credit. Do you have a variety of credit? For example, are you maybe having a credit card? Are you having a store card? Are you having a student loan or a personal loan? Are you having a home loan? Are you having a vehicle credit? They are basically looking at whether you are having different types of credit that is available to you. The fifth factor is new credit inquiries, which contributes 10% towards your credit score. And here they are really just looking at how often are you applying applying for new credit? Are you applying for a lot of new credit at once? Because if that is happening, that could be a red flag and that could actually bring your credit score down. So they really look at your history in terms of how many credit inquiries have you made, how apart or what is the time in between those applications. Then they allocate now towards 10% of that information towards your credit score. And when it comes to the scoring, one would ask, what is the best score? We know that the highest score that you can possibly get is 850, and the lowest that you can get is like 300. However, you can also get a 0, especially if you don't have any credit lines that are active. If you are not currently participating in any forms of credit, then you will have a 0. It's not necessarily a bad thing, it just indicates that you do not have any active credit lines or any active credit accounts at the moment. So it is not a bad thing to get a 0. In my opinion, getting a score that is more than 650 for me means you are doing well. Of course, you can always improve. There's always room for improvement, but anything above 650, I consider that as a good number. And if you have a number that is lower than that, that just shows that you need to work on your credit score. So to summarize, in the 5 key factors that are considered for your credit score, we are looking at your credit history, which makes up 35% of the score. Then we have your credit utilization, which makes up 30% of the score. And we also have the length of your credit history, which contributes to 15% of your credit score. And the fourth one is your credit mix, as to whether you have a variety of active accounts, and that contributes 10% towards your score. And the last one, which is factor number 5, is looking at your new credit inquiries, which also contributes 10% towards your score. So those are the factors that they look at. And if you want to improve your credit, those are actually the different areas that you want to look at to see where you need to improve and where you are lagging behind. So a lot of times people will ask, why do they need to worry about a credit score? Why is having a good credit score important, or why is having some sort of credit history or credit score important? Now, when you have good credit, you are able to get lower interest rates on loans and credit cards. Lenders want to see that you handle your credit well. So if you have a high score, then they are more likely to feel comfortable lending you their money for you to be able to utilize for whatever needs that you have. And with lower interest rates, it means you are paying less over time when it comes to how much money you are being charged for your loans. So you pay much less interest just because you have a good credit score. The second thing is that if you have a good credit score, you have a higher chance of getting approval for the credit lines that you are applying for. So whether it's a credit card, whether it's a vehicle financing, whether it's a home loan, whatever personal loan that you're applying for, when you have a good score, you are likely able to get approved for that loan because of your good credit score. A good credit score also gives you higher credit limits. Because of the good history that you have in terms of how you handle your credit, lenders are able, or banks are able, to give you a higher limit in terms of the credit that they extend to you, because they can see how well you handle your money based on your high credit score. And with a high limit, it just gives you a bit more flexibility in terms of your utilization of what you need to use that money for. Another point is that a good credit score can also help you to get a better rate in terms of your car insurance, because insurance companies are also looking at how well you manage your credit. So with a good score, you are able to actually get a better rate in terms of what your insurance company is charging you to insure your vehicle. It is also easier for you to get your home loan approved if you have a good credit score, because they also run the background check on your finances and on how you have previously handled credit which was extended to you. And when they see that your score is good, then the bank is likely to approve your loan because of your good credit history. And in addition to the previous points, a good credit score also allows you room for negotiation. When you know you have a good credit history and you have a good score on your hand, you are actually able to negotiate for better rates and to negotiate for better credit when you need it. Now we are going to look at how you can build a credit score, especially if you have never had credit before or you are just starting out and you want to go and get credit. This is actually how you can build up your credit score. The first thing that you can do in terms of building your credit score is to open a credit account. Open an account, a credit card with your bank or a store card or a student credit card. That actually allows you to have an active credit account. And if you cannot get a credit account in your name, or you have one but you still want to boost yourself, you can actually ask somebody, maybe a family member or a friend, to add you to their card as an authorized user. Yes, it's not in your name, but your name being listed there on their credit as an authorized user is also a way to help you to build up your credit score. The second thing that you need to do is to use your credit responsibly. When it comes to credit, you need to be mindful of how you utilize that credit. You need to make sure that your account is active, you make regular purchases, for example from your credit card, and you are able to keep the account active. And you also do not want to max out your limit. You don't want to spend the available credit that you have been given up to your limit. You want to maintain a utilization that is at least around 30% or less. So as much as you are making those purchases to keep the account active, you also don't want to use up all your available credit, because then that affects your credit score. The third thing you can also do is to make sure that in terms of your history, you have a history of paying your account on time and you have a history of not defaulting on your payments. So paying on time and not defaulting on your payments is quite important, because that contributes a large portion of your credit history in terms of how the lenders will view you based on how you have utilized your credit. To maintain good credit, monitor your credit reports. And here we are looking at making sure that you don't have a lot of hard inquiries on your credit score. You can get at least one credit report per year from any of the bureaus that are providing those credit reports. And when you do get it, you should check for any errors so that those can be corrected and they don't remain as part of your credit history. The second thing that you can do to maintain a good credit score is to maintain your older accounts. Like I said earlier, the older the accounts, the better in terms of the score that you get for your credit. So if you have an old credit card from the time when you were a student, if you can still keep it active, the older the better. Or the first credit card that you got when you started working, you can maintain that and keep that active. So the longer the history, the better for you. So it's not always good to close off your accounts and open new ones often. So it's good to keep a good credit account for some time. The third thing that you can do to maintain a good credit history is for you to avoid opening multiple accounts at once. It is not advisable for somebody to consider opening different credit cards or store cards at the same time, or applying for personal loans from different institutions at the same time. All those things affect your credit score. So do one and let that be, not for you to go with multiple accounts that you are applying for at the same time, because that hurts your credit. And again, like I said earlier, keep your utilization low. If your credit limit on your credit card, for instance, is 10,000. Do not spend the entire 10,000. Spend less than that. What is usually recommended is around 30% or less of the available credit. That is what you spend. So do not go and spend 80% or 100% of that, because then it affects your score. And the last one, which I've mentioned also previously, is to make sure that you are always paying on time. Even if you default just once, it affects your credit score. So do not default, and always make sure that you are paying on time. Put a reminder, have some form of tracking that you use so that you don't miss deadlines for when you need to pay. In fact, put it as an auto payment from your account, that amount that needs to go to the credit card goes off automatically, and then the account is settled. So now that we know how our credit score is calculated and how we can maintain and build a good credit score, let's look at choosing a credit card. What must one look at if you are choosing, or when you are choosing a credit card? When you are choosing a credit card, you need to ask yourself some questions. And some of those questions are, what are you going to use the card for? What are you mainly going to be spending on using that card? And that will assist you to choose the type of card that you need based on your needs, not just because it's a fancy card or you had it from your friend and then you go and take that. The first thing that you need to look at before you choose a credit card is annual fees. If you can, get a card that does not have annual fees. And if there are annual fees, the lower the fees, the better for you. So shop around, make comparisons with different providers, and really choose the card with either it does not have any annual fee or it has the lowest fee that you can possibly find out there. The lower the fees, the more money for you. Also look at the interest rate that is being charged on your credit card. When you make the comparison between different providers, how much interest are you being charged on that card by each provider? And the lower here again, the better. The lower interest you are being charged, the better for you, because it means you keep more money in your pocket and you can channel that money elsewhere where it can be for your growth, such as your savings and your investments. So shop around, make comparisons, go for the lowest interest rate that you can find. The third thing that you can look at is rewards. What rewards does the card come with? For example, do you get cash back? Do you get points? Do you get travel miles? What benefit or what rewards comes with that card? If you are a person who travels a lot, you might want to opt for a card that has a lot of rewards that you can use for your traveling. For example, for the airport lounges, for the miles, so that you don't have to spend a lot of money on your tickets and all of that. So depending on what your needs are, look at the benefits and choose a card that has benefits that you actually need or you are actually interested in. You can also look at cards that gives intro offers. This can be offers that are given as a bonus at the beginning when you take out a card, that you can spend a certain amount in a certain month or in the first 3 months, depending on what benefits they are offering. But here one needs to be careful not to overspend just because there is that bonus or there is that benefit. The fifth thing that one can look at when choosing a credit card is to look at the credit requirements. What does it require for you to have that card in place? When you are just starting out, for example, you don't need these complicated cards with a whole lot of things that are required for you to meet. Actually, just go with a starter card or a student card or a secured card. You really just need to look at what is the easiest one that you can get that can still cover or cater for your needs. Choose wisely. Don't just choose a card because it looks fancy or because you saw somebody you respect have it or your friend recommended it. Really shop around, make comparisons with different providers, and choose the best card for you based on what your priorities are and what your needs are. Here are some common mistakes that we can also look at avoiding when it comes to our credit scores and our credit cards. The first thing is missing payments. A lot of people just ignore and they miss payments. And missing payments also include your accounts in terms of your credit accounts, for example, with your phone or with your network provider. If you have a Wi-Fi contract or you have a phone contract, also making late payments to that affects your credit. Regardless of whether it's a credit card or whatever form of credit that you are having, make sure you do not miss any payments and you always pay on time. The second mistake is maxing out your cards. Like I said earlier, it's better to have your utilization at around 30% or less, so you do not max out. The moment you max out your card, it immediately affects your credit score. If you have done that in the past, at least now you know better. And moving forward, you know that you will not utilize the entire credit line that was extended to you. The third mistake is only making minimum payments I always mention this when it comes to high interest debt. You do not want to be making the minimum payments when it comes to this. Always pay in extra if you are able to pay in extra, so that you are able to reduce and pay it off faster. So don't just stick to the minimum. If they say the minimum is $80 and then you only put in that $80 every month, but you have a $20,000 that you owe on the card, it does not make sense. At least try to pay it off as fast as possible. Then you can continue using the card where you are paying for your usage, not where you are paying for a debt that is sitting there, that is just taking money out of your pocket. The fourth mistake, and I have touched this earlier, is applying for multiple credit at the same time. Again, that is something that affects our credit score and we need to avoid it. So do not go out to different providers applying for cards or for credit at the same time. And to help you to manage your credit, set up a system, something that works to help you manage. You can use spreadsheets, you can use apps that can help you track, but you can also just, like I said, use reminders in your phone so that you don't miss deadlines, especially your payment deadlines. So I have a credit tracker template on my website that you can access for free. And if that is something you have interest in, just click on the link in the description below. Then you can download the template and you can start tracking your credit. Credit is a tool, and when it's used wisely, it really helps us in terms of our finances. However, sometimes we tend to abuse it, which does not benefit us in the long run. There is nothing wrong with having credit or having a credit card. It's how you use it that is an issue. As long as you keep your account active and you are using your credit card in a responsible manner, then it should not become a problem in your life. We have come to the end of this video. If you are not already part of our growing family of more than 800 subscribers, I still cannot believe we are now more than 800. Hit that subscribe button, leave a comment, leave a like if you have found this video useful, and I will see you in the next video.